I was on mute. This is live broadcasting. I'm doing great. Welcome in. Grab your lunch. Get comfortable. I see you over there with the multiple tabs open, second screening us while you watch VTubers on Twitch. Close out of that nonsense. Get in here. It's episode 4, again, 4 of the Anchorage Vibestream. We haven't been canceled yet. Folks, normally the worst thing I can do here is embarrass myself, and I suppose Anchorage, but that's besides the point. Today we've got big stakes. We've got an actual client on the proverbial couch, a client that has deployed a cool 9 figures with Anchorage. So today the worst thing I can do is embarrass myself and cost us a customer at the same time. They told me this job wasn't going to be client facing when they hired me. But until I'm forced to face the consequences of my actions, I'm your host, Casey. And before you ask, I know what you're thinking. And yes, I am one of the property brothers, and my home reno show was canceled after I defaulted on all of my metaverse mortgages. This is the Anchorage Vibestream. We're live every Wednesday, noon Eastern, 9 a.m. Pacific, 5 p.m. Portugal, and midnight in Singapore. Watch and listen while you eat lunch, breakfast, dinner, have your midnight snack, your nightcap. Find us on X and YouTube. Apparently, we're hosting a Falcon X alumni event today. Shout out to Hardcore Matt at Falcon X, friend of the show. But let's bring our esteemed guests into the figurative gymnasium that is this reunion. Come on in, gentlemen. Say hi, and probably stay away from the reunion's punch. Welcome all.
Thanks for having me.
Our first guest, you're welcome, Matt. Our first guest today is Matthew Sheffield, Chief Investment Officer at SharpLink, the publicly traded institutional-grade Ethereum treasury platform that is using their active treasury management and disciplined capital markets execution strategy to grow ETH per share for its shareholders. Before SharpLink, Matt was the head of U.S. spot trading at Falcon X, running one of the largest OTC desks in the industry. And before that, he was at Bridgewater Associates, which is, your friendly neighborhood investment management firm with $92 billion in assets under management. Matt has business in his blood. Apparently, as a senior in high school, he started a sunglasses company called Shady Ideas, different lenses and frames. And I think he was also the captain of his high school's Consumer Bowl quiz team, which I believe won a title. So between becoming the next Ray-Ban, dominating trivia, the guy who oversees a multi-billion-dollar ETH treasury has a competitive edge. Matt, welcome to the show.
Thanks. You do your research. I had no idea that was on the CV.
I try. And I try because we have the head of research back on again, so I have to impress him. He's back for round 2. Our longtime viewers will remember him from episode 1, where we found out he's more prolific and researcher and writer than I am at, anything I do here at Anchorage. He's the other half of the Falcon X alumni reunion here today, and we've made a contractual guarantee with him that he won't have to play any brass instruments live. David, welcome back to the show.
How's it going, Casey? Matt, great to see you again. Excited for this conversation. Great to be back.
Likewise, it's been long overdue.
Yep. And no brass playing, man.
No brass.
Sorry.
For real.
Not yet. We got to get you into a real studio with, like the foam covered walls and all that. And we'll get you doing a recording session.
Give me a year to practice. Yeah.
Like we always do, let's start really simple. And I'm going to go to Matt first, since he's our esteemed external guest, and David, feel free to hop in as well. For our viewers watching who have no idea, what is a DAT? And since SharpLink is a DAT, what does SharpLink actually do?
It's a great place to start. So, Digital Asset Treasury, DAT, I'd say it was pioneered by Michael Saylor with MicroStrategy at this point about 6 years ago. And it's just the idea of putting crypto onto a public company balance sheet. And you're putting it into the corporate treasury, hence the T in DAT code. And the important thing about that is that back when Michael Saylor did it the first time, it was the only way a lot of people were able to access Bitcoin. There were no ETFs. There were a few closed-end trusts, but a lot of those were excluded from the mandate of institutional investors. Bitcoin was not easy to own for a lot of institutional managers. They didn't have the custody. They didn't have the regulatory clarity. And so they were able to go and leverage the public company wrapper that they know and love to be able to get some of that exposure. And that's really stayed at just MicroStrategy for a while. And then last year, there was a kind of resurgence of DATCOs for good and bad, honestly. And in the case of SharpLink, we were very early to this. We had been thinking about launching a treasury because we thought that Ethereum was fairly under accessible and that it would also uniquely benefit from the properties of a public company because ETH is different as an asset. It's a productive asset and something I'm going to talk about. And so we went and launched a company last year using a private investment in public equity. We raised $425 million from people who wanted to see Ethereum on a public company treasury. And then over the summer, we raised another 3 billion or so. And now to date, we have about 890,000 ETH, and we're actively deploying it, trying to generate additional ETH yields on top of it for our shareholders. So at the end of the day, it's no different than any other company. Our goal is to make as much dollars through time. It's just that we've made the decision that we think the best way to do that is to invest our treasury in Ethereum because we think that it's going to appreciate, and our shareholders have that same belief. So they want us to go and make that investment on their behalf.
This is awesome. Perhaps one thing, if I could add, Matt, it might be interesting to also put into context the difference between, there's different DAT models, right? There's obviously the strategy model, which is great and works great for them, but it's probably very focused on the financial engineering part of things. So basically, I would say that strategy's business is to kind of slice and dice Bitcoin's volatility and then resell that to different investors. They do that very well. They've been extremely successful at that. But there's also another model that can be done, especially with non-BTC treasury companies, right? So in a DAT like SharpLink, you can do things like staking. You can obtain extra returns that are just not available for Bitcoin. This is neither good or bad. It's just because Bitcoin is a different asset. And perhaps one way that you guys have been doing this very well, and one thing that I would love to see, especially the Ethereum that's getting even more engaged with, is deploying capital into the right ecosystems and supporting the Ethereum ecosystems that you guys think it makes sense. I'm sure we're going to talk about some governance initiatives, some important ones that are happening. So it's almost like, I think it's important to keep this in mind, Casey, and I'm not sure if Matt would agree with this framing, but the Ethereum DATs, they are in a way kind of a for-profit foundation because they not only have the return profile and then trying to achieve returns like every company does, but there's also a ecosystem fostering kind of role here that I think companies like SharpLink are playing very well.
Yeah, I think that's a great point. That Ethereum as a treasury asset has a unique productivity element that Bitcoin as digital gold just doesn't have. And so, whereas a lot of Bitcoin treasuries are focused on the financialized yield, doing things like tapping the ATM when they're trading at a premium to their net asset value, using those proceeds of those share issuances to go and purchase more of the underlying and capturing the difference. SharpLink has both the capital markets at its disposal to use those same tools. And we did that a lot last summer when the markets were a little bit more bullish. But we also are just trying to generate additional ETH on ETH by making it productive in the ecosystem. Ethereum has a large ecosystem for us to participate in, the majority of DeFi. settles there. And so we're trying to be a benevolent capitalist is kind of how we frame it. Like we want to do things that are good for shareholders, generate additional ETH on ETH returns, but they're also good for the ecosystem because at the end of the day, when you own 890,000 ETH, you want to make ETH more valuable and you also want to get more ETH for yourself. And so our North Star is just ETH per share growth. Like at the end of the day, that's how we measure our success. Ultimately, we think that Ethereum itself is going to appreciate over the long run, but the thing we have in our control today is how much additional ETH per share we can generate for people. And I think it's a nice lever to have because at the end of the day, this market is very cyclical. We've all been through multiple cycles. There's going to be periods of euphoria when you can leverage capital markets much more. There's going to be periods like what we've just experienced for the last 12 months where the markets are a bit depressed and you still want to have a strategy where you can go and generate value for shareholders. You're not just holding the coins and hoping that they go up.
This is great. There was a crisp explainer and a lot of stuff to dig into as well, from governance and DeFi settling on ETH and how SharpLink deploys it. And we're gonna dive into all that. But Matt, you went from Bridgewater to Falcon to running a public company's treasury that lives and dies by one asset. For you, uh, what did you really believe in Ethereum that made you confident enough to stake your career on it?
So it was interesting because at first Ethereum was a hobby for me. Like it was too early. I was not prescient like our chairman Joe Lubin in 2017 to say I'm going all in when I joined Bridgewater. It was something that I held. As DeFi became more prevalent, started to hobby around in my free time. There's also a bit of a mandate arb there. A lot of traders will know this. Like if you work at a traditional financial firm, you can't trade your personal account very actively. Crypto was not considered a developed asset class at the time for most banks, hedge funds, et cetera. And so you were allowed to actively participate in that ecosystem without restraint, which meant that once COVID rolled around, a lot of us had free time and I was able to go really dive in and fully understand the scope of what was there. And that's what made me jump because I realized that there was this unique opportunity. It felt very much like trading in the 90s from like a market and efficiency perspective, but it also very much felt like internet late 90s, early 2000s of like, yeah, the pipes are there. Like the tech is very interesting, but like people are just starting to build the interesting use cases on top of it. But I was still very much at that time interested in being involved as a trader and trying to profit off of those inefficiencies coming off of trading at Bridgewater. And that's when we went and started a crypto fund in 22. And we wanted to do that for the same pensions and endowments that were investors into Bridgewater looking for maybe their first foray into something that wasn't just VC or liquid VC. It goes back to that access schema concept. Like people weren't underwriting directional crypto risk at the time. They were mostly just willing to underwrite venture capital. And we went out there and raised some funds and we launched the fund. And then FTX happened 10 days after we went live. And we didn't lose any money on FTX, but pensions and endowments were a little less interested in underwriting our industry for a while thereafter. And we said, okay, great. The thesis was right place, wrong time. Falconex, on the other hand, being a market maker, you're in the center of the action. You get to meet all these industry participants. I was in a little bubble of trading up until that point, only talking to other traders. And then I got to actually see the world of protocols, what people were building, what good actors did to build strong companies and tokens, what bad actors did to maybe extract value from the system, unfortunately, before they should have, solely focused on P&L. And that kind of opened my aperture up. And that's what excited me to come over to SharpLink. I met the team. I already knew that the majority of DeFi was settling on Ethereum, but I also recognized that there was this huge opportunity to maybe serve a part of the industry that wasn't really capitalized to date. And that's kind of in the cold start capital space. Like you have billions of dollars raised by early stage venture funds to back these teams. They'll put tens of millions into great teams, marketing, distribution spend. And then the day they go live, there's not a dollar allocated to actually using the protocols that they built because it doesn't hit their IRR bogey. And we were like, hey, there's this unique thing called permanent capital. It looks a lot like a sovereign wealth fund in that respect. We can deploy for longer durations than anyone else in the industry, and we want to do so in a way that's industry aligned to grow the ecosystem. Maybe we can do something novel here. And that what really excited me about joining SharpLink. It was less that I was living and dying by ETH because I still view the portfolio the same I would a dollar portfolio. I'm just trying to generate ETH denominated returns instead. But now I had two goals. Like I could try to build something greater than myself in the ecosystem and also still focus on the trading, investments, et cetera, that I'm so passionate about. And it was honestly such a unique seat that when they approached me, like it was just a no brainer.
The ecosystem angle is an interesting thing to bring into the mix. We've got the conviction. Let's talk about SharpLink and put it to the test, and we'll bring David in as well. SharpLink went 8 months without buying ETH, October 2025 to right around June, and jumped back in when ETH hit its low for the year around $1,500. And I think you guys bought it through Falcon X of all places. So we're keeping the theme going here. What triggers deploying capital again versus holding cash or buying stock? And I guess, David, from your seat, watching DATs broadly as a researcher, is the sort of pause and resume pattern typical, or is SharpLink doing something particularly unique here?
Yeah, it's a great question. I think it varies a lot from company to company. The way I'm seeing SharpLink is that I think they're a very disciplined capital allocator. I'm not saying this because I'm in front of Matt, but Matt is one of the best traders I've ever worked with. And I've worked with a lot of traders. I've said this a couple of times on Twitter publicly. But I think it depends a little bit on kind of capital allocation discipline. It depends a little bit on what is the DAT model. So I don't think there's a right or wrong recipe here. But I think the way that within SharpLink's mandate, I think it does make a ton of sense, right? There are some times that these markets are just available to you, right? If you're trading at a premium or at least a substantial premium to your NAV, it makes sense to tap some of these markets and just straight out buy ETH out in the market. Sometimes it doesn't. And there are some companies that can have a little bit of kind of different strategies here. There are other companies that have a more complex capital structure. So this is also not going to cut black and white all of the time. But yeah, I would say it's totally normal. It happens. And it's pretty much what we've seen. I actually posted a chart that was not actually related to ETH. It was related to Hyperliquid. But a bunch of folks came to me, and I basically showed a chart of what is the percentage of the circulating supply that each DAT ecosystem has acquired over time. So you're going to see like Bitcoin growing kind of steadily, but constantly over the past 5 years plus. You're going to see Solana starting really strong and then tapering off. And then the two ecosystems that were very different were probably Hyperliquid and Ethereum. Those were two in which you saw a very big jump because you had a combination of very high profile debts coming, but also these companies trading at a substantial premium to their NAV, which allowed them to buy more in the market, to the point that maybe Matt will have more precise numbers here, but I think both Hyperliquid and Ethereum DATs, they now own something around 12% of the total circulating supply, which is way more than what you will see on the Bitcoin or even on the Solana side. So I think this has to do a lot with market dynamics. It has to do a lot with the capital structure of individual DATs. It has to do a lot with the prominence of the launches that we have seen. But I think overall, what I would say that if you look at the whole Ethereum DAT ecosystem, I think we're in very good shape.
Yeah, I would say what was very interesting about the timing front is that this is a very long-term thesis of how we want to build out the company. And we kind of think of it as no different than a fund manager considering doubling their AUM. Like as an investor, you want to make sure that they continue to perform at the level they've been performing and that their strategy can scale. Last summer, we were the first to market of the Ethereum treasuries. We came out hot. We raised a lot of capital at a very good cost of capital. We were trading at a premium to our MNAV, a positive MNAV, and we then purchased Ethereum with it. Immediately started to stake it to show that native yield. Immediately moved into some liquid staking and liquid restaking to demonstrate that we would be able to make it composable and stackable yield in the future. And then the capital markets kind of dried up for most of the treasury companies. But we had this portfolio that was yielding the staking yield that we were looking to go and push into additional opportunities. Meanwhile, cost of capital had gotten more expensive. Our goal isn't to be the largest for the sake of being the largest. Our goal is to generate as much ETH per share over time. So we're going to pick our spots. We've been pushing out on the deployment front that we were talking about earlier, trying to generate additional native yield. and building up the apparatus, assembling a team to do all of it in-house, so that we knew every marginal ETH that we raised could add more incremental value and not dilute the existing yield that we're earning. And then this summer in June, we had an opportunity. We had a single-hand investor who was looking to get very large exposure to SharpLink specifically. We knew the investor. We knew that they were willing to pay us a reasonable premium for our volatility, similar to what you discussed with Michael Saylor. We wanted to monetize the volatility of our stock to someone willing to pay enough. And so we did end up raising 75 million at the end of June, selling common stock at a premium to our MNAV, as well as warrants attached to it that were at a premium to that level. And it was priced appropriately. And it was in the middle of the back and forth of, are we in war? Are we not in war? And that was fantastic for us because we were currently in the I'm not in war. We have a fantastic real money buyer who wants to get long us and pay a premium that we thought was commensurate. Let's take that capital. And then we sat on our hands for a week and a half and waited for the next we are in war. Our stock dropped to the lowest it's traded ever. We did buybacks on that day. And then ETH dropped to a secular low and we purchased more ETH. We are not in a rush to accumulate to some certain target. We want to make sure that every time we do something, we're doing it as prudently as possible, because otherwise we could just be very large, but then there isn't very much upside in the future. Like, we've got so much runway left. We only own 890,000 ETH. We've said before, we don't think that we would exceed 5% of ETH ownership because we want to maintain the network security, and we think that that's an appropriate level given current staking. So we have so much runway left as long as we're very tight capital allocators, and it's really important to us because being large is not in itself a virtue. It makes you more liquid. There are some benefits, but it's not the whole value prop. Like, we really do want to focus on that ETH accretion.
This is a good segue about accumulation and ETH ownership. A handful of ETFs and treasury companies have something like 11% of the ETH supply. Bitmine said they want something like 5%, which they're close to if they don't have it already. SharpLink, second largest ETH treasury in the market. There's sort of an ongoing debate about whether that concentrates influence over the protocol's future. You've got groups like ETH Labs and the Ethereum Foundation who sort of position themselves more as neutral stewards that hold substantially less ETH. Is this sort of tension concerning? Whether you're observing it from the outside, like maybe David is, or for Matt, yourself, someone who's considering this from inside one of the ETH DATs, so to speak.
I think that it's something the industry should constantly watch, whether it's Ethereum or other ecosystems. If it's working well, and I think it has to date, you'll have a very strong foundation who maintains their credible neutrality and doesn't take the influence of outside firms disproportionate to their economic ownership. If it works properly, you have economically aligned actors working alongside ideologically aligned actors and people with different time horizons. We are thinking in years, but we are also reporting in quarters. They think a decade out at a time. Like, these are good tensions to exist as long as one side doesn't have undue influence on the other. That's part of our commitment to make these spinouts credibly neutral. So you mentioned ETH Labs. There's also Ethereum Institutional. These are two organizations that spun out of the Ethereum Foundation in the last 6 weeks or so that SharpLink helped to co-back. And we did that alongside Joe Lubin, Bitmine, and a number of other prominent industry organizations. And both of these are not-for-profit orgs, with the intention being they're going to maintain their credible neutrality. We've also backed some for-profit organizations that are going to try to push through things that we think are net good for ETH, but are not fully crops aligned, but they are good for us economically. And that's us doing seed and venture, and that's us building our pipeline of future yield. So we're going to continue to, I think, be very upfront with the fact that we're shareholder first. We're trying to make money. We think that this is the best way to make money. But at the end of the day, it's still in our best interest to do things that are good for Ethereum because we can generate additional ETH per share via yield. But at the end of the day, the price of ETH matters just as much. And so we try to do things that are good for both. And yeah, if at any point people think that Ethereum or any of these other ecosystems has too much undue influence from outside actors, that would raise concern. That's part of our commitment to never going above a certain percentage of the staking. That's part of our commitment to trying to work with credibly neutral external firms. But mostly it's part of our commitment to just try to put our cards on the table and say, here are the things we are doing trying to be good for Ethereum as an ecosystem, and here are the things we are trying to do that are economically good for our shareholders. Like, we're not trying to conflate the two.
I would maybe I fully agree with Matt here. I would maybe even go a step further. I think the existence of DATs has improved Ethereum's governance in a way that not everybody realizes yet, right? If we think about the Ethereum governance model and the Ethereum Foundation, and like a lot how a lot of the Ethereum community was expecting the Ethereum Foundation to do a lot of things, maybe as you would see in some other ecosystems. I think today we are in a format that I think is so much better and makes so much sense for an ecosystem like Ethereum, where you have an Ethereum foundation that has a limited role, focused on crops, focused on the core properties of the protocol. And then you have all these, let's say, profit seeking or profit aware institutions that are doing the things that a lot of the market cares about. So things like institutional adoption, how to reach out to the right institutions, how to highlight the Ethereum advantages over other ecosystems, what are the right ecosystems within Ethereum to incentivize, even maybe from a capital allocation perspective. So I think that this multi-layered governance model that basically the DATs have enabled over the past year or so is way better than what we had in Ethereum before. Of course, there are limits and we got to pay attention. Matt talked about the 5% kind of limit, and I think this all makes sense. But as long as we are operating within these constraints, I think it's important to keep in mind that the Ethereum governance framework today, I would say, and I haven't seen too many people disagree with that, is in a much better shape than it was a year or a year and a half ago.
This is it's a good time to talk about Ethereum governance and DATs participating and improving governance. Matt, you mentioned EtherLink sort of doing good for Ethereum as well as its shareholders, and things like not exceeding staking percentages. Um, SharpLink SharpLink's mandate, reportedly extends into potential governance roles within Ethereum. Um, Concretely, sort of what does that mean? We've got EIPs, advisory conversations, running your own validator infrastructure as an option, and then there's other sort of hot button topics at the moment, like the EIP for um, partial validator burns. Not that I'm asking you to give a hard and fast opinion on that right now, but um, what SharpLink's participation in governance, what does that sort of look like or might look like?
So I'd say our role is definitely going to evolve over time, but our primary objectives are to make sure that we're a credible voice in the conversation, not necessarily credibly neutral, but a credible voice that makes its opinions well known with facts underlying it, and also that people understand our motivations behind those things. That we try to consistently show through our actions that we're trying to do things that are good for Ethereum so that we can build additional trust, and that we also try to expand the number of stakeholders and participants in the conversation to make it more accessible. And so that's taken a few forms, right? Like in these credibly neutral spinouts from the EF, in one of those, our CEO is a board member. When you're the board member of a not-for-profit, it is mostly to make sure that it is being run appropriately in line with like reasonable economic governance. It is not to decide what someone goes and says, it is not to decide how someone votes. That would be explicitly against the entire construct of it. But you do want to make sure the organization is well run. In other situations like ETH Labs, we've contributed the money and we have no governance. We have no oversight. It is simply that we think they're doing the work that is good for Ethereum, that the Ethereum Foundation wanted to trim its belt on and didn't want to continue to pay for effectively, but that these were people that we wanted to keep in the industry and that it was net better. It's very much, in my opinion, like open source contributions from for-profit companies like Microsoft. Every year, 10,000 plus Microsoft employees contribute to open source. They maintain .NET, et cetera. They don't profit off of that, but they are being an active steward of the ecosystem that benefits them and trying to grow it because they understand that a vibrant ecosystem is one that they can make more profit in. And I think that's kind of how we view these things. On the EIP, I'd say our view is mostly just it's time to build up DeFi and to get as much of the world on chain as possible. At the end of the day, if you want to be sound money, you have to have positive nominal rates, non-zero inflation, and positive real rates. We saw what happened in the 70s in the US when that wasn't true. You enter into massive inflation and people flee your asset. We saw what happened in Turkey and in Argentina in the last 5 years with the exact same situation. People flee the asset if you have negative real yields. You can't expect people to pay to secure the network. It's just against their economic interest. We also do explicitly say, by the way, we are a business that makes a lot of our income from staking yield, but we reinvest a lot of that into the ecosystem in ways that we think are net better than the very minor reduction in emissions that you're trying to do. We're not saying this is a no forever, but we do think it's the wrong time for such a thing when we're trying to build and grow. And this is a policy that much more feels like 10 years from now, when the world is already on Ethereum, what you might do if you wanted to turn something into a deflationary risk asset to make it strong money and reduce the velocity of money and take away from it being a form of interchange.
Great answer. Great answer. What's missing today that might stop a large asset manager or bank from deploying meaningfully on chain? So, just to tee some things up here, regulatory clarity, custody infrastructure, execution venues, maybe it's a cultural thing at firms. Matt, you're seeing this. David, you're looking at it across the whole market. Thoughts?
Yeah, I'd say to start on the regulatory front, clarity in the generic sense of the word is necessary, but I do think that in the process of negotiating the Clarity Act and having this conversation in daylight, we've already accomplished the majority of what was needed to actually go and make banks comfortable going on chain. Like, would it be ideal if this thing passes when September session comes back? Absolutely. But the agencies have already said, we're going to split this thing up and provide you with guidance. We've already seen people like BlackRock, who had been holding off on additional products, deploy new funds on chain in large size on Ethereum in the last month or so. And very importantly, we've gotten away from regulation by enforcement. So I think the Clarity Act was this point in time catalyst people were looking for, but in reality, just the last year of negotiating it basically brought us all the good that we needed. And now it's just like that last mile of, is it going to be from a signature or is it going to be from the agency splitting it up? I think on the Wall Street adoption front, they needed a front door, a single place that they could go and ask questions and figure out how to navigate this landscape. It's really difficult. Like, if you go into a car dealership and say, my budget is X, what should I buy? They're going to find you a car that costs $1 less than that. If you go out and put an RFP to the world, you're going to get a dozen different VC-backed L1s that are trying to get you to take the 75% of the token supply they've currently got sitting in the foundation off their hands. They're going to try to give you incentives in this token to lock yourself away from the world and just put yourself on their underproductive chain. And they're going to tell you that they're the best possible thing that you could do for your business. And you don't have anyone that you can really go to ask these questions that isn't trying to sell you something. And so that was the construct behind Ethereum Institutional. They're a not-for-profit. They're supposed to be credibly neutral. Don't get me wrong, they are definitely going to tell you things that are in the Ethereum ecosystem, but they don't have a product to sell you. And the idea was they already came from the team that had the TradFi relationships at the Ethereum Foundation, but now they're capitalized to go be that single point of contact that you can make if you're looking for someone to help basically shepherd you through the ecosystem. And on the last infrastructure point, where David, I think, will have a very strong view, we've been trying to raise the standard for what institutional DeFi looks like. And we've been doing this in large part with Anchorage as our partner. Like, up until this point, the qualified custodian was this like Ocean's 11 style, 12 stories underground in the middle of Nevada vault, where someone locks up your coins and then eventually you can go and ask them to get them back. And it's extremely secure. And that is what people thought of when they thought of qualified custodian. But we wanted to have that same bar of QC for DeFi deployments. And so we've worked with Anchorage within their bank charter to still be able to do things like deploying into our Linea EtherFi Eigen deal. We used a bridge. We were able to do this out of DeFi. These are things that anyone who's listening that runs a portfolio in their own finds to be extremely mundane day-to-day tasks. But for a public company to do it out of UC, these were huge, and we continue to try to push the envelope of what you could do without having to compromise on those standards. I think banks are going to be the exact same way. And so, partners like Anchorage have helped us do it. And that's kind of the third piece of the puzzle, I think, is bringing it to TradFi standards so that they can just plug and play.
100% agree. Yeah, I don't have much to add to what Matt just said, but perhaps the only thing I would say is that these things never move at the speed that we would like them to, right? We who are in the industry, who are used to a lot of this infrastructure, we wish this thing would be moving in a much faster pace. But I think when we stop and think about all the progress that we've made over the past year or two, it's actually kind of amazing. And I think we're starting to see some of those results already reflecting in the market, as Matt said, but some of these massive names starting to deploy more capital on chain, to the point that it's honestly not even that much of big news in the industry. Those who are in crypto for a while, let's say 3 or 4 or 5 years ago, when you had one medium-sized fintech, maybe even not even allocate to crypto, not even engage in crypto, but just say something positive about crypto, that would already be major news. I think we're now in such a different environment, and I'm also very excited about all the progress that we're seeing. Of course, we would all like to see more. I wouldn't count Clarity as dead. There is a chance that we might get something done in the few weeks that we have in September before the Senate and the Congress closes for the midterms. But we'll see. I think we've already made a lot of progress.
Let's fast forward 2 or 3 years when hopefully more of this infrastructure has been built and things have changed, and Mr. Beast might be the 48th president of the United States. Who knows? Matt, what does a version of SharpLink you're excited about look like?
I would say that SharpLink would end up being someone that has pushed the envelope for what institutions were able to do and then opened the gates for people to do it on the follow. Like every time we do something for the first time, if it's accessing a protocol from a QC or going and structuring one of these funds in a very specific way that makes it accessible for a public company, we're hopefully giving precedent to a ton of other capital allocators to just do the exact same thing on the follow. And so my hope is that 2 to 3 years from now, we have an incredibly vibrant portfolio of things that the industry is benefiting from, that we're profiting from, and that we know was basically the first drop in a bucket, and that an absolute waterfall came on the follow from people who wanted to just have a trodden path they could basically follow along. And that's how we know that we've done a good job for Ethereum, not just for the shareholders. And then doing these things first, it makes the job way more interesting. Like we're always bumping up against first time situations, case laws and precedents, and like that makes things novel. Like that's kind of what I want to be doing.
That's why it's great to be in the space, leading from the front. SharpLink. Gentlemen, we're coming up on the end of time here, and like always, we're going to end on something fun. My wheel of decisions from last week has been repurposed for Anchorage strategic planning purposes, so we're doing this the old-fashioned way with some rapid fire. David and Matt, you two are old colleagues, which is why you've decided to spin up a friendly neighborhood nine-figure ETH DAT, and funding it is an eccentric billionaire with unconventional ideas who's committed to deploying ETH for yield with his vision board full of nonsense. So I'd like to welcome you both to your new company, ETH Brothers Unlimited. And I've got this rapid fire list of ideas where I want you to deploy our ETH, yes or no, from you on where to put the ETH. And you have to align on at least one of these ideas. So this is the vision board. Idea number one: a chain of psychic hotlines staffed entirely by AI agents. Are you deploying the ETH here, yes or no? David and Matt.
I don't love that. Do we need to agree on
You got to agree on one. We're gonna go through the five, and if you can't agree on one through the rapid fire, you got to hash it out. We're doing one of these terrible business ideas.
What do you think, Matt? I don't love it.
I'm on the fence. I'm a superstitious person. Like I'm getting married in a few days. The weather was supposed to be terrible. We hired one of those Etsy witches that's supposed to fix the weather, and 24 hours later, it shows sunshine and rainbows. And so I don't need to understand how it works. Like I'd rather be lucky than right. I'm not writing this one off. I haven't seen the other ideas though.
That is a more targeted market strategy. Is some sort of ETH-based Etsy witch situation. This is a good one. Okay, all right. This is in the maybe pile. Idea number two is a staked ETH Del Boca Vista retirement community idea. Rent is only payable in staked ETH. What do we think about this?
I like it. It's sustainable. You're creating your pension, right? Like you're just drawing on your staking rewards, living a great life. off of Ethereum's rewards. I mean, that's a win.
Circular economy. Yeah, I like this one better. Yeah.
All right, we threw one in specifically for David. Oh wait, no, it's not this one yet. We'll get to that one. Idea number 3 is a regional network of scratch-off lottery kiosks with prizes paid in restaked ETH.
I'm going to avoid this one just because our company used to be called SharpLink Gaming, even though we had no gambling involved. We have spent the last year trying to remind people that there is no gambling involved with SharpLink. There never has been. There never will. This seems like it'd be a step back.
We're saying no to the lottery kiosks. Okay.
Fair enough. I'm actually surprised this doesn't exist yet. But
yeah,
fair.
That's a good. People love scratchers. Idea 4: a fan-owned lower division Brazilian football club. Membership and ownership of the club is through ETH tokens. What do we think about this? Sort of I guess a Chili's situation, but slightly different.
I like it.
I like it. I'm not sure if it has to be a lower division one. Maybe those teams are cheap enough. Maybe we can even get a D1 Brazilian team there. I like it.
And then the last one is brick and mortar, a chain of brick and mortar. We resurrect Blockbuster Video. Items are restocked and paid for via staking yield. What do we think of this?
I have an impossible time selecting from the millions of options. And so there is something about going into a store and saying, what should I watch tonight? And having someone just tell you, it was so much easier. I'm for it. Let's bring back Blockbuster and Redbox.
I am also nostalgic about just walking around the Blockbuster corridor and trying to figure out what movie to watch. I want to see that happening.
It was good. The video store was a good Friday night sort of situation. Everybody misses it. All right, so we agree on the Blockbuster, and I think we agreed on the retirement community. This is good, and Matt can also spin any of these ideas. It sounds this again, business in the blood from the man who launched a sunglasses company when he was in high school. This is great. Great answers. We are going to make a lot of shareholders incredibly confused. Matt, thank you for coming on the show today. David, thank you for coming back. Currently topping the leaderboard for most appearances. Glad we were able to do the Falcon X alumni reunion here today. Thanks for coming on, guys.
Thanks, Casey.
Thank you, Casey. Matt, great to see you as always.
And thank you, yes, you out there for watching. Thanks to everyone who helps put this together. Aaron, Kate, Sam, Joe, Mika, and Dwart. Gentlemen, say goodbye to the kitchen staff from the Musket Room who I paid to watch this show while they are on their smoke break. Stay tuned to see what's up next week. Bye-bye, everyone.
What does designing money look like? Next week, Emanuele Rossi and Laird Skrelly from M0 join us to talk about stablecoins, creation, issuance, and industry adoption. It's all on the Anchorage Vibestream, 12 p.m. Eastern, 9 a.m. Pacific.